You never know when you might get a phone call from somebody that's interested in buying you, and lo and behold, it's a pretty attractive offer. And every company is going to have some sort of exit. You're either going to transition to the next generation or you're going to sell. I personally believe and have taken our company in this direction that putting a strategic roadmap together is the best thing a company can do.
Like when you build your company, like have the end in mind. But a lot of times when we start our businesses, it's more of, via necessity or because we are crazy. I don't know, what.
Are you ready to feel like it's Friday every day? I'm Mark Labriola II, and this is The Friday Habit. We interview experts to learn how to bring excitement, possibility, and sweet, sweet relief into every single day, no matter what day it is. If you're a small business owner, entrepreneur, or agency leader, get ready to grow your business, lead with purpose, and build a life you love. Welcome to The Friday Habit.
All right, and welcome back to another episode of The Friday Habit. Today we have a special guest. I'm joined by Ellen Wood, the trailblazing CEO and co-founder of VCFO. Ellen is a pioneer in the virtual CFO space and has spent nearly 3 decades helping small to mid-sized businesses grow strategically, enhancing their value and prepare for pivotal moments like mergers and acquisitions. So, Ellen, welcome to the Friday Habit.
Thank you. Delighted to be here.
Yeah. Well, hey, so you've been doing the virtual CFO thing for a while, right? I mean,
A long time.
You were doing it before it was cool.
We were doing it before it was a thing.
Yeah, exactly. So I'd love to hear a little bit about kind of what got you into that space and kind of what inspired you to co-found the company and introduce that concept of virtual CFO.
Well, I'd love to tell you. So it actually was personal experience. I was a young CFO at the time with a telecommunications company that was a startup in the deregulated telecom industry at that point, and also bought one of the very first internet providers before people really knew what that was. So if you could even imagine, it was a very, very interesting time to be in that business. But as we went to sell the company, which is often the objective of these, I realized that I didn't have all the experience I needed to really do the optimal job there. And I started looking around for it, and there really wasn't a resource other than mentors and, connection, friends, things like that. And I thought, there really ought to be a place that a person could go to, because who has all the experience, right? Nobody has all the experience they need to do anything, anytime. And that's really where the idea came from, is I wish I'd had it. So as we sold that company, I had the opportunity to sort of chart my own course and partnered up with someone who became a good friend of mine. And we been exploring doing fractional executives well before anyone thought that was a thing.
Yeah, I mean, it's such a common thing I see now with fractional CMOs and, sometimes, especially as a small business, it's like, even for us, we're a small company of 5 people and I can't really, afford like a CFO. And I don't know if we have enough necessarily work on a day-to-day basis that would warrant us to have a CFO or some of these higher level executives. And so to me, it just makes so much sense as far as having something like that for small business and mid-sized business, companies. So, as far as, so the CFO role, right, it's in my mind, it's something that's very strategic, right? Like a lot of times small businesses, they're always stuck, and we talk about this a lot on the show as far as like stuck in the day-to-day, stuck in the grind of, working in the business and not always having the time to work on the business. And so I think in your experience, what are the roadblocks that prevents small businesses from focusing on that strategic growth instead of daily operations?
Well, first they have to be willing to put the time in to do it. And it's also a budget issue. While it's not bringing a full-time senior level executive on board, there is a cost to it.
Right.
And you have to be willing to spend that. Now, CFOs for small and medium-sized businesses, which is SMBs, really what our focus is, they are more broad than only strategic. So our CFOs wear the hat that takes care of both the accounting side of the house and the strategic planning and finance side of the house. As companies grow up, 100 million, they're headed to an IPO or some sort of a much bigger transaction, then the roles become more separate. But in our world, our CFO is a multifaceted person who can both help make sure that everything is happening that needs to on the infrastructure side and accurate financial statements are being generated and so forth, reporting, KPIs, to the strategic planning for how can we really take this company and take it where we want to take it to meet the goals of the founders.
Yeah. So as far as some practical advice, right? Like for the business that's stuck in that day-to-day grind, what are the first steps that you would give to say that they should, start thinking more strategically? Like what should they do in order to take that next step to think more strategically?
Well, I'll tell you, I personally believe and have taken our company in this direction that putting a strategic roadmap together is the best thing a company can do and as early in the life of the company as possible. A lot of times people don't start thinking about those things until they're ready for an exit. And they're like, wow, I wish I had, paid attention to this problem or that problem 2 years ago or 3 years ago. What we like to do is take our clients, and we take every client that is a fit for this through what we call a V360, which is the development of a strategic roadmap. And we don't just focus on finance. We ask about 120 questions of the founder or the C-level team. And we, of course, review the financials, being the financial people that we are. But there's about 6 different key elements that we look at that are important to the strategic evolution of a company. And our philosophy is you're going to be working anyway. Why not work smart to a roadmap that's going to take you from here at this value to a higher value? And again, I'm focused on value because shareholder value is really what it's all about for a business owner, no matter what they're doing, whether they're just, maybe they're going to go out and they're going to do a capital raise and they need to use some equity for that. Well, you're going to have less dilution the more valuable you are. Maybe you're going to do a little acquisition and you want it to be a combination of stock and cash or debt, or who knows what you want your structure to be. But the more valuable your stock is, the less dilutive something like that is to you, meaning that you continue to own more of the company.
Right.
So the things that we look at beyond financials, which are the basics, we're going to benchmark you against competition, give you ideas on what you could be doing to be worth more. We're going to look at things like leadership, culture, people issues. I have an entire suite of HR professionals that focus on the people issues, which are incredibly important, not only to your business, but also your income statement.
Right.
And of course, risk management is in there as well. What we do is we go through that process. It doesn't take very long, really amazingly short for the value that you get. And we deliver a picture to you that says, here's how you stack up in these different areas. And if you were to turn your attention toward these areas, you would be worth this much more today with your current revenue and your current EBITDA, or earnings before interest, taxes, and depreciation, common measurement for value.
Right.
With what you've got today, if you took care of these other, areas of your business, you would be worth this much more. So we actually put pencil to the dollars and give them a picture of how much they could improve in value in each of those areas. That way, before they start spending any money whatsoever on whatever it might take to do that, they have an idea of what the end game is going to be. And I just think that is very, very valuable to a small business owner, any business owner.
Right. Yeah. So you mentioned there's like 6 steps that you take people through. What are those 6 steps?
Well, we look at the financials in depth, and we do a benchmark against industry comparable companies and help you see where you have opportunities to make improvements based on best performers. Leadership, do you have the right people in place to drive this company to where you need to go? Do you have the people to support a succession plan? And of course, the smaller you are, the harder it is to, you're not quite at that point yet. You don't have budget to have much of a succession plan, but you need to be thinking about it. Infrastructure, do you have the right systems in place? Are you thinking about bringing AI in where it makes sense? Is everyone's role optimized in the company? Those sorts of things. Of course, the people matters and culture, putting those 2 steps together. In our company, our top value is people first. And I think every company ought to think that way.
Yeah.
And in order to keep people first, you need to have a culture, and you need to walk the talk. And so we think that's very, very important, and something that anyone valuing a company is going to look at. And then the last was risk management, because there's some things you can manage and there's some things you can't manage, but you want to manage as much as you can. You can manage customer concentration, right, by focusing on that. You can manage certain risks with insurance. You can manage cybersecurity risk with the right system. So we're going to take a look at all those things that really any person who's valuing a company is going to pay attention to above and beyond that bottom line number.
Yeah. What size companies are we talking about? I mean, are you dealing with or working with companies that are like 2-3 people? Or like what size is where it's like, at that point, you really should just kind of work on things your own. And then when you get to 10, 15, 20, 30, 40, 50 plus, because I know what small business is like, 500 and below or something like that?
500
people.
Well,
yeah, like what determines a small business, right? Like what you have, like companies that have hundreds of thousands of employees, right? That's not a small business. But then you have companies that are, several hundred or 300, 400, 500 people, which to me is like, that's not a small business. But I know that there's definitions that kind of vary depending on the industry.
Well, they do. And it kind of depends on what city you're in. So we're in 4 cities. So we're in Dallas and Houston. And, people who have $300 million companies with 500 employees describe themselves as a little middle market business, right?
Yeah.
Then you go to Austin and Denver, our other 2 markets would be more similar, where our definition of a small, medium-sized business that's a fit for us is going to be 10 to 100 million and probably 20 to 150 employees. Now, at the same time, we've done hundreds of startups, raw startups. It's just a different service line for those folks. They are all about getting off the ground, getting funding, deploying all those initial. So you can make some of your biggest mistakes in your first few months of existence, let me tell you.
Yeah, I bet.
So there's never a reason not to have a conversation, but there's a different solution, which is why we're not a canned service. We look at a person and we say, here's where you are, and here's what you're missing, and here's the value that we could bring to you, and then help them make the right decision. Some people come to us and they are too early for us. We're just not going to be able to deliver value they need, and we help them find the right resource.
Yeah. So I guess, for me, I'm kind of thinking about our audience, which are going to be, small business owners. They're going to be freelancers, creatives, agency owners, people who are kind of in this growing startup kind of phase. And so I guess I'm curious on what you would advise those people as far as it pertains to, keeping your finances and your records. And, a lot of times when you're first starting out, it's like the Wild West. You're just flying by the seat of your pants, and you're not really being organized, and you're just kind of taking jobs that come. And so, what kind of advice do you give to those people who are kind of new to the game? And like, what are some good foundations or building blocks that you can say, hey, like you should really focus on these things as you grow?
Those good questions. So we'll just sort of presume that I'm having a chat with someone that's in that situation. That's sort of early days for them. There's maybe 1 or 2 people. Let's say there's just 1 person and you're getting started. One of my first pieces of advice would be think about your structure. So are you, and make sure that you have a separate identity for your business and set it up in a protected entity like a LLC or something like that. Give a lot of thought to setting up a partnership. It's important to know that when you bring a partner on, it really changes the governance structure of what you can do. I'm personally a little less in favor of partnerships myself.
Why is that? Because people go rogue, relationships go bad?
Yeah, exactly. That is exactly right. I've had situations, to give you an example, where one person started their company and then they brought a friend in maybe several months in and they gave them half of the company. Okay. Well, once you've given half of your company away, you are never going to get any more back. But this person thought maybe they would somewhere down the road. I don't know how. So that person, then the second person decided it wasn't for them and they were leaving. Well, now you've got somebody who's got half your company who's walked away, right? So there's all kinds of ways to structure granting.
And that could really hurt a friendship, right? Because if that person's walk away, but they own half the company, and then you stay and you build it and you make it into this, $1 million empire, multi-million-dollar empire, and that other person did nothing to contribute to it, then it builds that animosity and bitterness, and like I could see how that definitely.
That's very bad for friendships. And I have a friend right now who has a situation like that where they're in a 1/3 ownership position of something that they've 100% built and run. So, you should never, from a governance perspective, if you've got a situation like that, stop and deal with it right then. It may be that you have to reincorporate, but remember, there's things like corporate opportunities. So you can't necessarily, you're going to have to deal with that person who took half your company and walked away. You're going to probably have to legally buy them out in some way, and that probably won't feel very fair to you. So there's all kinds of structures you could use. You could do reverse vesting, which means I'm going to give this to you, but if you leave before 2 years, 3 years, 4 years, 5 years, you have to give it back to me, that sort of thing. So there's that kind of advice is really important early days, though, because you're never, ever going to have more equity in your business than you do when you get started.
Right. Yeah. One of the other things I kind of hear people talk about, and even people ask me, like, oh, I'm starting a business. What do you think? What is your thoughts on kind of an LLC sole proprietor or LLC like S-Corp? What would be the benefit of staying LLC or moving to more of an S-Corp framework?
Well, I'm not really a tax CPA, which I guess goes to the point earlier of you don't know everything about everything. And so that's one thing that I will tell you, that, it's like a doctor. They don't know everything about everything. But I think that the sole proprietor it's got its risks. You don't have protection. You don't have legal protection for things that are happening. I generally recommend people think about an LLC to get started. Personally, we're a C-Corp. We've been an S-Corp before. S-Corps come with rules that work for smaller businesses, but I think probably you can accomplish what you want from a liability protection and a tax strategy with an LLC. You asked about other advice. Absolutely. Keep your finances separate. Open a business account and run your business expenses through there, and be sure you keep your documentation, even if you hand it in a shoebox to somebody.
Okay.
You want to have it in case somebody comes knocking on the door asking you questions.
Yeah, it's better to have it, not need it, than need it and not have it, for sure.
That's right. It's even better to have it in a shoebox than not have it at all. So we've had clients that have come to us who literally had shoeboxes around the room, and it was a matter of kind of pulling it together and putting it together. But that's important. Another important thing to think about is borrowing money. Be very, back to the friends and family, be really careful about who you take money from, because it feels awful when you can't pay back friends and family.
Right.
And one of the things that's sort of a hard lesson that I tell people is, if you have really worked something for quite some time and you can't get traction and you can't get people to invest in you, remember that you're kind of burning your own capital. It may be an idea that's before its time, or you need to take it in a different direction. So if you're out trying to raise money and you're not having success, it is important to take a hard look at what your ask is.
Yeah. When you started, because in some ways you're an entrepreneur, right? I mean,
absolutely.
All those years ago.
100%. Yes.
Yeah. So did you have partners, or did you start kind of with a team of people that you went out, or were you just the solo running gun Ellen Wood, doing her own thing?
Interesting you say that, because I was doing my own thing and had my own clients. And a good friend of mine introduced me to somebody else who was doing their own thing and had clients. And we said, wow, this is pretty cool. We'd have more fun if we worked together. And so we shook hands, which is not the way to form a partnership. But we did. And away we went. And ultimately, one of our early clients hired him almost, within a year to be full-time for them, which is always a problem for me, because our clients want to hire people. They fall in love with them. They're like, oh, I really know you. I like you. So, but I just loved the idea and carried on with it and built it out, starting with CFOs and controllers, adding the HR team, and, other services that are meaningful to our clients.
Yeah. Did you grow up kind of in an entrepreneurial family, or did you work a day job and then realize I don't want to be beholden to somebody else?
Well, that I agree with. I don't want to be beholden to someone else. But my immediate family was not entrepreneurial at all. My dad was a CD guy, right? That's what we're going to invest in, is CDs. So I actually eventually converted him to, so the stock market was a good thing.
Okay, nice.
But my grandparents were entrepreneurs, so maybe it skips a generation. They actually started the very first tour agency in Dallas, Texas for students that traveled abroad as part of their education. And you think about how common that is now. Nobody's doing it. My granddad drove the bus, and my grandmother had a master's in education, and she put the programs together. And
what was this, like in the 50s and 60s or something like that?
Are you trying to make me old? Let's see, how old would that have been?
Well, your grandparents. I mean, they.
I made myself old. So that would have been, I would say, the 60s.
Okay,
that would
yeah.
be the 60s. And it was Dallas Tour. Anthony Tours was the name of it. So anyway, pretty cool. So I guess I have entrepreneurial genes in there once removed.
Yeah. What were some of the things earlier on? Did you start off with like a big client, and so that was like really helpful for you to kind of, have that security? And then, what were some of the things you did to try to like get your name out there or grow your business?
Well, I'll tell you that I'd like to say I had this beautiful, brilliant vision, and I knew this was the time, et cetera, but that was not the case. I did have a nice client. The company that I helped sell, I then stayed on and helped them transition. Also, I'm based here in Austin, Texas, and we had a very, very large fund here called Austin Ventures, which some people will remember. Biggest fund in the Southwest. And they had a really successful technology IPO, I guess in 1996. And that led them to start putting $1 million into teams of a marketing person and an engineer to go out and try to develop a new idea. They thought, this is really cool, let's do it again. But they didn't want to fund a finance person, right? Great for me, because I got to go in and be the fractional finance person. And so we would help them. And literally, we did hundreds of these for different venture funds, helping them get their first money in the door, helping them put their infrastructure together, their hiring plan, how they were going to use their equity. Really a ton of fun. And so I was lucky in that way, because I was right here in Austin. They were right here in Austin. And we just got a ton of business that way. And then we branched out to other venture funds as well.
Nice. At what point should someone start thinking about their exit strategy? I don't know if you read that book, Built to Sell, but, it's just all about like when you build your company, like have the end in mind. But a lot of times when we start our businesses, it's more of, via necessity or because we are crazy. I don't know, what, but a lot of times we're not thinking about that end in mind. At what point do you think someone should start thinking about the next thing, what their exit strategy is, or what?
Well, that is, it's a personal question. I often start with that when I'm talking to a prospective client, because I'd like to know. That helps me know which direction we ought to go with them. We have some clients who come in, and for them, it's a family legacy business, second, third generation, and there's different issues that have to be dealt with there. More of our clients, though, again, when you think about what our primary size is, 10 to 100 million, they're at the point where they should be thinking about it, right? And every company is going to have some sort of exit. You're either going to transition to the next generation, or you're going to sell, or you're going to go out of business. I mean, there's not a lot of other choices.
Yeah.
And so that's one reason that we really settled about 18 months ago now on how important this V360 is, because we think people should be prepared at every step of the way for whatever comes in the door. You never know when you might get a phone call from somebody that's interested in buying you, and lo and behold, it's a pretty attractive offer. Well, it's a little late then to be fixing up different things that they're going to poke on you when they look your company over. So I think it's important to have that conversation and thought process as early as you're comfortable having it. And if I had to give you a number of years, I would say you should have a 5-year horizon.
Okay.
Can you do it in less time? Sure. But why?
Yeah. And is that kind of your advice too when you're doing planning, kind of doing, it seems like a common like 3 to 5 year plan as far as, as you're looking out to do things?
Well, a lot of people say, I don't think you can, I think it's really hard to have any, detailed vision 3 years out. We can have vision, but to actually know what's going to happen, that's important to a lot of funding sources to see 3 years, but they know that too. They know that, you give them 5 years and a hockey stick and they're going to discount it themselves. So you want a really tight 1 year. You want a really tight cash flow forecast to make sure that, you're not going to run out of cash doing whatever it is that's on your plan. And then I think it's important to have a 3-year plan. And I think it's important to have 5 and 10-year aspirations.
Yeah.
So I don't know if anybody has talked to you or on your show about the entrepreneurial operating system or
Yeah,
EOS.
EOS.
So
Trying to
we
think,
use it.
I don't know if we've necessarily had someone specific to EOS on the show. Maybe we have. I mean, we've been doing the show for 5 years, so sometimes I forget the guests that we have. But yeah, Traction, I think, was the name of the book.
That's right.
That,
That's right.
I can't remember the guy who wrote it, but I think that's a great system. One of the complaints I have about it, and then in the book, it kind of talks like, oh, it doesn't matter what size you are, you just can implement these things, and whether that's the guy at the top who's the CEO, the CMO, and the CFO, and then as they grow, he can give those things out. But one of my gripes with it is sometimes it feels a little bit overwhelming with all the little details that are a part of it. Is this EOS something that you are kind of all dialed in on and you recommend? I mean, it does make for clean books, I would say, as far as, if someone is in the EOS system, it is very structured, which I think is very beneficial.
We are totally dialed into it. And I'll tell you, we are 29 years old this year, right? So, you can learn new tricks. We didn't accept it. We didn't really adopt it until the second half of 2018.
Okay.
2019 was our best year ever. Then, of course, 2020, COVID hit. And when COVID hit, I was actually in Norway. We were on the last flight that got out of Norway before they closed the border.
Man, that must have been like,
it was exciting. But the reason I'm telling you that is I called my team from Norway, and we were able to pivot and be up and running in less than a week. We missed less than a week, and we were able to help all of our clients. And we give a lot of the credit for that to EOS. And the reason is not all the little details, but the accountability. The accountability chart may be the most important thing about EOS, where everyone knows what they're responsible for. It's not an org chart. It's a who's responsible. So when we had to make those pivots for COVID, as an example, we knew who owned that. And there was no was that mine? Is it yours? We just flat got in there and got it done. But the reason I mentioned it was there is a 1 year, 3 year, 10-year sort of number that they encourage you to adjust every year. And I think that, we do have that, but we don't have a perfect plan to get to our 10-year number. Yeah. We had a pretty good year. We had a pretty good plan for the 1 year and the 3 year.
Yeah. And that's one of the things that happens, especially with startups and, really, really small businesses, is that it really varies like from year to year. I mean, when I started Brand Viva 10 years ago now, it was just me doing all the things. And, we've steadily grown over the decade. Every year we've grown, and, I've hired people, and now we have W-2 employees and, several 1099s. And it's just been one of those things where sometimes I'll plan and I'll put all this effort into, putting all these things into writing and setting these goals. And then it all just blows up because something else happens. And, we get some big client from left field that, wasn't even planned. And then it takes all of our energy on to focusing on that. And so I feel like it has been difficult to really put together, I would say, that 3 to 5 year vision board or plan, and then stick to it, because it seems like we're always just all over the place,
Well, for the size you're talking about, I would absolutely focus on 12 months. I'd focus on 12 months and a really solid cash flow, a 13-week rolling cash flow, so that you're always aware of what's going on and what's out there. Because, you mentioned a really large client. You can have large clients come in, but if you don't pay attention to the credit terms with those, you can really find yourself in some trouble. So, so that's another interesting place where people get excited about new clients, but they've got to think about, well, what's the cash flow investment to either deliver on that, or, what kind of terms are they going to ask for, because they're a bigger company and they can do it. But I don't want to spend too much time on that. But if I were you, if I were a small business, I would spend time on my 12-month plan and my 13-week cash flow. And I would have in my mind where I'm headed for 3 years and where I'd like to take the company eventually. Right. But I wouldn't be obsessed about it, because you're exactly right. Life happens and you have to adjust.
Yeah. Yeah, no, it definitely is important. And the cash flow thing's a big thing. For us here, we used to be very just project based, so it was very much like, okay, what's in the pipeline, what's coming up, and all that. And then as we grew, one of the things that kind of really change things here was I started, putting clients more on retainers. And so that it was more predictable income as far as, okay, we sign year-long retainers with clients, and that makes it a lot more easy to plan and know exactly what's coming in. And then as projects come in throughout the year, then it's just kind of that cherry on top of like, okay, great. This is just additional to what we have. So I think that was a real, game changer as far as that goes. But then one of the downsides too, though, is that especially with those bigger clients, you also can lose a big client, and a few of those, a few years ago is one of those things where it's like 3 of our clients were 75% of our income. And so it's like when we, lost one of those big clients, it's like, oh, wow, this
very painful.
Yeah, exactly. So then that's when I started thinking more of like, all right, I think we should try to grow wider instead of, deeper with one client or 2 clients. If we have several clients and when we lose 1 or 2, that it doesn't impact the bottom line as much or hurt as badly when trying to find a replacement, for them.
You're exactly right. And when I was mentioning earlier, those 6 areas that we look at, one of them is customer concentration from a risk perspective. So you can have this beautiful income statement, but if too much of it is tied up in one spot, you're a hostage there. You don't want to be a hostage. But I'll also commend you because a retainer for a year looks much more like recurring revenue, and recurring revenue has a much higher valuation multiple than, project revenue. So kudos there.
Okay. Well, thank you. I didn't know these things, but now I do. So, what are some surprising insights that you have kind of gained throughout all the years when you kind of come into a company? What are the things that people are missing or that you see as kind of those holes in people's strategy or their business? What are some of those things you've seen, and what can we be looking for?
Well, if I was going to tailor that response more to a smaller company, kind of just getting started, I would say you may not realize that you have a culture, but you do. You are the culture, early days. And my generation, that really was not a focus the earliest days of my career. Pre-starting my own company, that's just was not talked about. It really, you just wasn't. And that's been, I think, an amazing transformation that I've seen that's so important, because motivating your people as you begin to add people, bringing people on to a strong culture that you talk about and that you live and that, you embody in what you do, I think is one of the most important things you can do. Otherwise, it won't be long before you have 5 different people going 5 different directions.
Right.
And so I would encourage thinking about that. Of course, you've got to, do all the work and pay the bills and all those other things too. But you can do that and still be reminding people of that, of how important that is to you and how important it is to the company. So, and I guess when I got this business started, I wasn't really thinking that way either. I evolved into that with the learning and different things that came along the way. But it's truly one of the most important things for any business.
Yeah. And I think, it can be something as simple as just putting down some ideas of the things that you value and how you like to operate. I know for me, because we are a small team, I started to do things based off of like what I liked and wanted, and so the culture, one of the things was earlier on, it's like, well, I really want to go to the gym in the morning and I don't want to, have to be at the office at like 8 a.m. sharp, and I remember there was jobs where it's like, man, if you flow it in at like 8:01 or 8:05, like, people are giving you side eye, like, oh, it must be nice, and I always just hated that feeling of not having any autonomy whatsoever. And so that was kind of one of the things where I decided earlier on where it's like, all right, like I want us to get our work done and I want us to be focused and I want us to be hardworking, but I don't want that culture of like, oh, I'm watching when you're coming to your desk and, how many seconds has it been past the time? And so, that was kind of like one of those things where it's like, okay, I think like autonomy is one of those things I value, where it's like, okay, I want to be able to build that. And then, so kind of putting down some of these things like excellence in the work that we do, and integrity, and being honest, and expecting the best in our clients and each other, assuming the best, and just being positive and having fun, like all these other kind of things. And so a lot of times it just is helpful just to put pen to paper and write some of those things down and kind of get some clarity around what kind of company and what kind of culture you want to work and be in, and what kind of person you want to be a part of your company, And I know that has kind of attracted people to Brand Viva because the energy is like that here,
I think that's great. And absolutely, though, write it down and then continue to, iterate on it and change it a little bit, for, I guess until about 3 years ago, we actually moved our second bullet up to first place, and that is people first. It was second.
Okay.
We had integrity. Well, integrity is kind of table stakes for us, so we decided we could move it down.
Yeah.
And really put people first, which is where it should be. So I would encourage you to write it down.
Yeah. No, I agree. Those are some of the things. It's like, I just waited too long to do some of that stuff because you just get caught up in the day to day, You
do. But you got those people coming on board, and they're like, "Well, how do we work around here? What makes us tick, and so forth." And when you're small, that you can still sort of personally deliver that message. But there will come a point, and it'll be when you're really busy, that you add that person that's one person too many to do that with. So I encourage you to do that. You asked me earlier about things that I would advise, companies in this stage that are getting started. And we do have a couple of tools that I could tell you about real quick that are free.
I'd love to hear
that you guys anybody could go look at them. They're out on our website, VCFO.com. It's called HR Pulse, just a pulse, and Finance Pulse.
Okay.
And if you go out there and you take it, it'll take you 5 minutes or less. I might see I'm not going to say I wouldn't know that someone took it, but I don't get a copy of the report. VCFO does not get a copy. We just put that out there so that you could get immediate feedback, but sort of how you stack up based on how you answered questions in different areas. And then we also put some free resources on there in terms of blogs and tools. I think there's a 13-week cash flow out there as an example, as a tool. There's also a set of values out there. Just to give you examples, we put the ones that we use that are out there so that people could just sort of look at that. And if we never talk to them, nobody's going to call them. Those are tools that people can use.
That's awesome. Thank you for that. And make sure that you head over there and get those resources. So this has been a great conversation. I feel like I've learned some really good things, and I am glad we had a talk.
Well, I appreciate the invitation. I love to talk about business, and if I can ever help you, I hope you'll give me a call.
Yeah, for sure. So we like to close things out with giving a piece of advice. And so how can someone start next week off on the right foot? And I guess one thought I had, or I guess the way that I would frame the question to you is, if you could give one piece of advice to a CEO who's looking to future-proof their business, what would that piece of advice be?
Well, I got to tell you, that was a layup for me because I'm a total believer in doing the V360 strategic roadmap. That's why I invested the time to develop it. It's why we do it for every client. I think it'll give you a snapshot of your business that will be informative and give you an opportunity to take it in directions you might not have thought of. So for our companies that are of a size that makes sense, that's what I would do. And for companies that aren't, I'd go look at those pulse surveys and see what they have to say to you.
Okay, and then that shoebox. Get that shoebox out and start putting receipts in
right.
it.
Hang on
and
to them.
staying organized, and make sure that you have all your documentation. So if the government comes knocking someday, you'll just hand them over the shoeboxes.
It's been done.
I love it. Well, hey, thanks so much for being with us, and thank you for listening to The Friday Habit. If you go to thefridayhabit.com, you can find show notes for this episode. You can also find links to our websites and ways to get in touch. And at the bottom of the page, you can download our Friday Habit system. That's going to show you how to set aside one full day each week to dedicate working on your business instead of always in your business. You can reach us at hello@thefridayhabit.com if you got any questions or a guest suggestion. And remember, until next time, live every day like it's Friday.